Thank you everyone for showing up, and I hope you would benefit from my presentation that doesn't have any traditional slides. We're just gonna go into a quiz. Let me just introduce myself. I'm Wael Makarem. I've been trading for 15 years, and I run the Strategists team at Exness. We're a team of 10. We cover different asset classes, from FX, commodities, stocks, cryptocurrencies, and you name it. So I'm not gonna do the presentation about Exness. I believe if you are into financial markets, especially into brokerages, you have to know Exness. Exness is a leading broker, not just like by marketing as a leading broker, but yes, actually, truly, we are the largest retail broker in terms of volumes, and we have more than 1 million active users a month that uses our platforms. So I decided to talk about trading psychology because I believe after 15 years in trading, I believe trading psychology is the best thing. Even if you have the best system, a lot of people would ask me, what's the best indicator? What's the best strategy? How I can make money? And there is no best indicator. There is no best strategy. It's all in you. 90% of trading is psychology. How many of you were stuck in a losing trade and they started averaging on that trade? Let's be frank. We're all here to benefit and to participate. And how many of you did exit a perfect setup that they've been waiting for a long time, just too early because of their emotions? Plenty of us. All of us would do it. Over the past 15 years, I've done a lot of mistakes, and I still do mistakes, and we learn from mistakes. And what I like about trading is that there's a rush, and there's always something new. What we've seen for the past few days in gold, when it comes to ATR or the ranges that we're dealing with, we've never seen something like that before. When it comes to percentages, it's something normal. So we're dealing with a new type of emotions that we've seen gold, for example, dropping more than $130 in a session from the top. So all these things would affect definitely our performance. I gathered a little bit of questions to make it a little bit more interacting and to see how much you know psychology of trading. Let's run Slido. It's gonna be very easy. QR codes, and then we kick it off. Just gonna move away. In the end, there will be a scoreboard, so you can please use your names so we can know who's the winner. I assume we have around 30 participants, so we're just gonna wait for a little bit of time. Unfortunately, this was the last minute. But the prize is in the talking. This is the best thing. If you learn from these things, you don't need the prizes. But perfect, you have 26 participants. We're just gonna give it one more minute. Can someone elaborate on their best trade for the week and the worst trade of the week? What was it? What was your best trade for the week? It's fine. You haven't traded. Who traded this week and had the best trade? Benefit from volatility. Who had the worst trade? Come on, guys, don't be shy. Okay, so let's run it. We're gonna start. Last chance for you to join. 10 seconds. 10, 9, 8. So, start. Can you see just the number of incorrect? 1 correct and 21. You know what would this imply? This is psychology of trading. This is what we mentioned, what you see in disclaimers, that 90% of traders lose money. This is just a small example. I thought it's just gonna be run with questions live, but apparently there's something with Slido, so it's not showing the questions. But this is the first one. And then we're gonna go over these things again. 7 correct, and 9, 10, 11 incorrect. Which psychological trap leads a trader to only seek out analysis that support their bias? Who knows it? Okay, we're gonna dissect each one alone, and we're gonna speak about each of these, because these would make you lose money. And we're just gonna give small tips. I'm not gonna give you something that everyone looks for, the holy grail. There's no holy grail. But at least some tips to try to avoid these things. How many of you have doubled down on a losing trade, just hoping that the market's gonna go back in their favor? A lot of us would have done this. It works with you when the market is trading sideways because you would be able to catch maybe bottoms and tops. But when the market goes in a one direction, then you're gonna be ending up losing your account. Similarly to those who were buying gold at 3,450, 3,430, 410, and hoping for a reversal, gold went against them more than $100, and then most of them, they were liquidated. Another way around. What does a FOMO usually result in? How many people, unfortunately, a lot of people would come to me and they would say, we got stuck in this trade that I find no pure setup why they were in this trade, but because they heard someone speaking about gold going up or gold going down, or indices going up and indices going down, and then they were in a trade because they didn't want to miss the opportunity. So don't lose your money just because you don't want to lose the opportunity. There is always opportunities in the markets. Crypto trades 24/7. Other assets trade 24/5. Some do certain segments. So there's always opportunity, but make sure at least to last there in order to find the opportunity that would suit you. But if I'm just gonna go and try to pick what opportunity could be best and I don't want to lose it, you could be stuck in a losing trade. This one is funny, by the way. Which hormone is responsible for the rush traders feel when a trade goes in your favor? How many of you felt super happy, relaxed that the trade is going in your side? Okay, I believe we've gave enough time to show the results. Let's give it one more minute. Unfortunately, this is a record. 1 correct and 30 incorrect. Like this is something. You know why? I just lost $1,000 this morning because I was bored. But I can afford to lose it. I have my risk management and all that. But I was bored waiting for someone. I clicked on it and I wanted to feel this sight of excitement in the morning, just trading the markets, and that's it. A lot of people would just be waiting for someone, and because I have easy access to my platform, I would go in and I want to trade, just because you're bored. So the best thing to do is to first assess your entries using a laptop. Why? Because you're more concentrated, focused, you have bigger chart, you can see things, and you force yourself to have different reasons. And just if you want to use your mobile just to track what your trade is doing. But don't open a trade from your mobile, because most of the time you're on the go and you're just doing this. So you're not focusing. You're not giving it the essence that it needs to be there. So definitely boredom is one of the things that would get you in a trade at a time where you don't need to trade. Yasmin, let's end it. So let's see the results. Score, Pulkit, 6 out of 7. Who's the winner? I believe it's you. Yeah. So can you speak a little bit about your trading? Does knowing these things help you in having better performance?
Hi.
Yeah. Hello.
Hi everyone. So actually the best strategy...
Can you get it closer?
Yeah. Hello. So best strategy which I am following in the trading, that I only buy I'm just intra-trading. Okay. So I just buy when I'm just fully confident. If I will just put my stop loss and I will just do. If nothing is gone, if everything is gone against me, then I didn't trade. If I have a loss, if suppose 1000 INR, if I have a loss in a day, and I have just follow my rules, and after that I didn't trade. If anything, markets go up and goes down. So I didn't trade for that.
Perfect. Perfect. So Thank you for your input. So what he mentioned is something very, very important, because he seems he has a certain system that he works on. If you want your trading not to be chaotic, you need to stick to a system. We're not saying that this system will work always, because in trading there is nothing that would always make you money, and there is no 100% accuracy. And even having a high system accuracy, the market is engineered in a way where if you have a high success rate, your risk to reward is different. So you're going to be risking a lot for the rewards. And if you have a low success rate, you're going to be making much more money on what you are risking. So that's the dilemma in markets. And whenever you move any of these, just to give you a small example, if you take any strategy with a take profit and a stop loss 10 to 10, you're going to end up with almost 50-50. If you're going to move your stop loss to 20 and your take profit to 5, you're going to go into 75% maybe hit ratio or 66% hit ratio, whatever. But in the end, you're just going to be doing it the same, as if you moved both parts together. Same the other way around. If you're just going to go for 5 pips stop loss, 15 pips take profit, you're going to have less success rate. And what's going to differ is also you're going to be almost stagnant on the account. So what would make you a better trader? Sticking to certain rules that are just the rules, not the numbers. For example, if you're sticking to a stop loss of 10 pips and a take profit of 10 pips, or these are just fixed, it's not going to work for you because the markets are always changing. $1 on gold 2 years back is different than $1 on gold now. $1 on gold now is just like the ATR for gold in a minute is $2.5 almost. Previously, it was around 50 cents to $1. So this is changing. Always make sure to have your set of rules dynamic, moving with markets. Markets are moving. If you're just fixed to one thing, you're not going to make it because things change. Unless you're basing it mostly on percentages, which I don't believe most of traders and speculators would do that. So this is very important. Make sure to stick to a certain system and the way like to have more than one reason to trade. I have a good friend in Oman. He's successful for the past few months. Why is that? Because he decided he's not going to go into a trade unless he has 5 reasons to enter a trade. And you have to be disciplined on that. Because sometimes if you're just going to say, oh, it's fine, I'm going to miss that opportunity, you're getting into a fear of missing out. And most of the time, you're going to have a poor entry, and then you're just going to end up losing. So make sure to have more than one condition to enter a trade. Always make sure not risking money more than you can afford to risk. And you have to always expect that in markets, losses are part of the game. You have to lose. There is no way you're not losing. There is no way. Because you can't be right all the time. But how you can deal with your losses will shape up your trading journey, will shape up your equity curve. If you're just gonna, when you see a loss, you're just gonna end up revenge trading. How many of you lost the first trade and then they were like, all in, trying to recover? They're adding. It happens that way. Something similar, small example. If you, for example, you made good money on the day, you started with a 9,000, you're close to 9,900. You would say, let me go to 10,000. It's just like $100. I made 900 today, so $100 is easy. And then if you incur a loss on that, because you started the day early in the morning, you were very focused, sharp, you were making good decisions, and then when the US market has came, you're exhausted, tired, your efficiency on taking decisions is way lower. So what you're gonna do, your risk of ruin is high, your risk of success is low, your percentage of success is low. So you're gonna open a trade after having $900 a day on the day as profits. You're gonna lose 50 of these 900. I assure you, 90% of you will end the day losing the 900 and losing from their capital on it. Because this is revenge trading and you're stuck to something that, okay, you were at a place and you wanna go back again, higher. I had a client visiting the booth yesterday. He made some money, he's new to markets, he made some money. And he said, like, I don't know what to do now. Told him to stay away, not trade, learn more, because he's a newbie, but he made money. So, because if he's gonna trade now, he will lose a little, and then something will get stuck into his mind, how I'm gonna make back the gains that I had. And then he will chase them and chase them and chase them. He will take higher risk, take more trades, jump into over trading, no risk management, add more on the trades, bigger trade sizes, and he will end up losing his gains and his capital. So trading, you have to deal with trading literally as if it's something very solid, and you have to really dedicate time, effort, and then be in good mindset when you're trading. You can't just trade anytime. You can't expect yourself to beat the market at any time. And especially most of the people that I've been meeting lately, they are day traders. And when you're a day trader, you have a lot of exposure. And also, you're not competing with like normal market behavior. There are thousands of algorithms that they're just pumping orders in and out, and even tens of thousands, hundreds of thousands. And then this is what you're competing with. And you expect with your mindset to try to beat it on the short term. When we're speaking about long term, it's different. When we're speaking about investing, it's different. But I'm speaking about that and precise because most of the traders, they are day traders. Everyone is not satisfied with a few % return. One of my funds have been doing, like since July, we're on a winning streak. We had only one losing month in August. And we're up on the main account 170%. But on a risk, a value at risk 6.5, we're up 25% and a 5% drawdown, which is awesome. If I come today and would tell any one of you, are you happy with a 25% return in almost 8 months, they would say, man, 25% return on $1,000 is nothing. So on $1,000, I'm on $10,000. And this is in markets. Yes, maybe you can do that. You can see a lot of these Instagram videos now, buy, 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 buy. These guys, they would ruin 100 times their accounts before making it one time. So you have to, if you want certain return, it's either you have to have big capital with smaller percentage return that you stay in a good risk management, or you are into the gambling zone where you are having a small deposit and trying to really make it higher. So starting from a small account and literally going into a few 100% return, this is something with a probability of maybe 0.000%. It could happen. Maybe you could benefit a lot from certain market events. It would make it way easier. But is this sustainable? No. And unfortunately, social media, you can see a lot of people on social media bragging about how much money they're making, showing you fake lifestyle and all that. Most of these guys, they're just like showing the money that they got either from commissions or they're just like got from a certain way doing things. But you look for people who have track record, who really understand markets, work properly, accept certain returns. These are the ones who you should really be trying to get on with them. So stay away from fake promises for profits. Stay away from over trading. Stay away from just the urge of opening a trade every day, every single hour. Move into a little bit of an investing mindset. And this will get you on the way slowly, slowly. Yes, trading is fun. There's a rush. It's nice. But I don't think it's nice when you lose your money just trying to make money, but with almost zero-sum game. So it's fine trading setups. It's fine assessing certain market criteria. Yes, allocating certain probabilities, because in the markets in the end we're trading probabilities. It's all probabilities. So you have a risk of, you have a chance of success, and you have also a risk of ruining or having a losing trade. It's normal. You are trading probability. What we try to do, get into a technical setup. This technical setup has a certain probability. Okay, fine. I'll try to merge it with some fundamental analysis, and if it works, I was fine. I will live to trade another day properly. And if it went the other way, it's normal. This is the way markets behave. But what I have to make sure of is that if it went the other way, not to ruin all my account. So we are in a very delicate medium. Markets nowadays are very volatile. A lot of things are happening. So always make sure to follow proper risk management techniques. Do not go under fear of missing out stuff. It will come to you, but you have to be prepared properly. You have to have the right mindset, good capital, wait for it a little. Sometimes things take more time to really show returns. It will happen, but don't just like lose whatever you have now while you're not prepared. Better to keep them, start small, slowly build it, and then when you have the right set of tools, the right mindset and everything, then you inject your capital and trade the proper way. This is everything that I have today for you. I hope you guys did benefit from what I just spoke about. If you have any questions, if you want to do more discussions, I'm available at booth number 4 at Exness. And thank you so much for attending. Congratulations for making it. And thank you. Please make sure to follow your proper risk management, especially nowadays. We have a lot of volatility, high volatility. Everything is changing so fast. So please make sure to preserve your capital until we pass this uncertainty. Thank you for showing up, and I wish you all a good day.